All right, folks, welcome to the video. Anthony Special here with Hawkeye Traders. I want to talk to you today about an opportunity identified live, okay? Everything in hindsight, of course, is 2020. But when it comes to credibility of understanding volume and price action, if it's not identified as the market's ticking, then, yes, you can create theory around it, but having the actual proof that you identified it live when it was transpiring, to me, just is the proof of concept, right? Because anybody can go, oh, hindsight, it does this. Okay, great. But were you able to identify it exactly when it happened so that there was an opportunity to capitalize on it? So I want to talk about this. This is gold futures, okay? This is a 3-minute chart, meaning each candle represents 3 minutes. With folks live, I identified this opportunity, and I'm going to show you and walk you through the analysis I did in order for the expectation to play out. Now, expectation, right? That doesn't mean that it's gospel. It means that if the volume and price action continue to react in this manner, that interpretation based on the evidence would tell us, hey, there's a chance price is going to go higher from here. So let's dive into it. We're going to look at it very specifically. I'm going to do the analysis with you, okay? This way you can kind of see how I break down understanding what price is doing. We're going to look very intricately at one particular candle at the volume, all right? And what that candle printed and looked like, because it's meaningful. So I'm always looking for, hey, if we're going higher, is there an area that has proven to provide some form of resistance, right? We can all probably agree that we came up to this level, we fell back, we kind of wicked into it a few more times, we fell back, and then we kind of came back down here to retest this level here. So we would call this a period of congestion or consolidation, depending on whichever term you're most familiar with, but ultimately a period of indecision, right? We're just kind of bopping around here. Nothing's happening. That's okay. Like, these periods happen in the market all the time. Normally after them, though, there could potentially be an opportunity if we can identify our edge in the market. Our edge in the market, at least my edge in the market, is volume and price action. So that's what we're going to talk about today. So as you can see, we exit this congestion here, right? I'm going to zoom this in a little bit, and then we'll kind of focus on the balance here. I just want to look at where the opportunity specifically was found. So we exit congestion here, right? And then we hold above and we start this consolidative stuck kind of motion here. We go 1, 2, 3, almost 4 candles just sideways, going absolutely nowhere, right? This to me is very important, right? I'm going to explain to you exactly why. First, I'm going to identify the area, right? I'm going to just draw kind of a box around the very specific area that I'm kind of concerned about. I'm very interested in this area right here. What's happening here, right? We have a fair amount of buying volume. I'm going to move this over so you can see it. Like you could see, basically the same level of buying volume that pushed us out and then continued to push us higher in that following candle. But the candle didn't go anywhere, right? And then we move to the next candle, and we have ultra high selling volume. This is where my interest gets piqued, because around these specific areas, there is opportunity more often than not to be had if you're able to simply interpret it, okay? So I'm looking at that candle specifically right there. When I saw this big selling candle, and then I looked up here and I said, oh, this candle actually closed higher than it opened. And for all that aggressive selling, like, we didn't go anywhere. Kind of odd, right? You think if we have this high selling, ultra high selling volume, that we would have this drastic move. When there's a divergence, there's normally an opportunity, okay? So I vocalized out loud in real time when I saw this. I said, hey, this area right here could very well provide the push higher. If this area specifically holds, and I'm talking about these specific candles, 848, 851, 854, I said if we can hold above these three consolidating candles, I think we can go higher. Ultra high selling volume, and we never settle below that candle. That to me tells me that there's a pretty good chance that the sellers exhausted themselves or the buyers have absorbed them, and that something here is going to transpire. Now you look at this movie and you go, wow, this is really impressive, right? Because let's just break it down. So we get long here, we place our stop, I don't know, we risk 15 ticks roughly, a few ticks below that low of this wick right here. And then we take this huge run, 128 ticks in a very short period of time, basically into the opening bell, a little before the opening bell. That's not the best part, guys. Because from this little area identified by Hawkeye volume and price action, I mean, you got to give credit where credit's due. We ran as high as 306 ticks. Now, am I suggesting that you sold at the absolute high? No, I'm not. But if you just held your position here into the closing bell, you still ended up with 240 ticks. All you had to do was not be a greedy pig and just keep taking some profit every time the market pushed higher. Because if you notice about this little area that I identified, price never even came back to retest it. Never mind push through it, never mind hunt your stop. Price never even came back to retest it. Identifiable congestion, consolidation, whichever term you prefer, it's the same thing, right? A period of indecision. We break that area, and then we have the opportunity to analyze the volume and the price action. And when you get tight little candles like that, you get high selling volume and no ability for price to push below it, more often than not, the evidence provides a potentially massive move could transpire. Risking 15 ticks, you had an opportunity to take profit at over 300 ticks. Again, I'm not suggesting that anybody caught the absolute top. Nobody does. But along the way, you had an opportunity to beautifully pay yourself and protect yourself to whatever degree your trade plan tells you to do it. If you just left your stop here at your entry, price never retraced to it through the entire balance of the session into and through the closing bell. You must identify what the market's doing. The market was in a period of congestion, consolidation, indecision. Whichever of those terms you're comfortable with, that's what the market was in. The market exited that, and then the market provided the unique opportunity to analyze the volume and the price action. And when there's a divergence between them, it often sets up an opportunity for a massive, massive move to be had. Every time? No. I can just tell you from experience, the evidence provides that there is opportunity to be had from components and setups just like this. The question is, are you willing to invest the time and the effort to understand volume and price action? Because without understanding those two things, your analysis per component of your edge, meaning your trade plan, is lacking something severely that it needs, okay? If you're willing to do that, guys, these opportunities exist, right? This is an intraday setup. It'll happen on a 3-minute chart. It'll happen on a 30-minute chart. It'll happen on a 3-hour chart. daily, weekly, monthly. I don't care what time frame you want to trade, right? I look at all kinds of time frames. I do day trading, I do swing trading, I do position trading, right? But I trade live every single morning in front of people because that's the evidence that I'm able to do this, right? If I did it all by myself and sat in a room like, oh guys, yeah, I cherry picked all these trades. No. I talk about this live. Why? Because that's the only way that there's credibility. It's the only way there's credibility. Because anybody can go back and cherry pick a chart. But when you can identify it when it's happening and say we got a little bit of risk that as long as we hold this area, we should squeeze higher. And it sure did. But you must understand what phase the price action is in. And then you must understand when there's a divergence between volume and price action and what that could potentially mean. So I invite you to learn more. Below this video, there's some links. Okay, I want you to click on them. I want you to consume the content. I want you to send me an email with any questions you have. I want you to reach out to my Hawkeye Concierge team, ask them any questions that you have. Okay, and I want you to carefully look at your approach to the market. And if the forefront of your approach to the market is not volume and price action, and you are not a wildly successful and profitable trader, I want you to just have a humble conversation with yourself and say, hey, if I could just better understand what's happening in the market and the divergence between volume and price action, could this give my edge a better probability of potentially identifying more successful trades? And if the answer to any of those questions or elements to those questions are yes, then I want you to have a conversation with us. Okay? There's no high pressure sales. If you want the indicators, happy to give them to you. They work on TradingView, TradeStation, NinjaTrader, and MetaTrader. Okay, all the popular platforms they work on. They print just the way you see them here on my screen. This is the volume paint bar. This is the wide bar. This is our Hawkeye proprietary volume. This is our volume radar. Okay, that's it. You don't need more than that. Everything else on the chart, other than volume and price action, is a lagging indicator or a lagging display of what's already transpired. But understanding when there's a divergence and how to compute what that divergence is and what it means is the game changer. It doesn't matter if you're day trading, swing trading, position trading. It makes no difference. So I want you guys to have a long, hard conversation with yourself and say, is my trade plan volume and price action forward? If it's not, I ask you kindly, please reach out to us. It's worth a conversation. If we can help you improve your odds and probability of being successful as a trader, that's what we're here to do. Okay? And if we're not able to, or you don't believe we're able to, that's okay. Nobody's going to pressure you into anything. So again, I encourage you, click the links below, consume the content, reach out to myself, reach out to my Hawkeye Concierge team. Feel free to browse through my YouTube. There's tons of videos, okay? Me showing how I do this live and can interpret this stuff. And you can too, right? Like, I'm no rocket scientist. You can too. And with a little time, a little effort and practice, you will master it. And it will change the trajectory of your trading. All right, guys? Feel free to like the video. Feel free to leave a comment below. Please subscribe to the channel if you haven't. God bless, and I will see you in the next one.